basically giving you guys today's price action based on yesterday's relative strength index, at least intraday. Okay, so that's what we have to do. The relative strength index, the way I have mine set up is on a closing basis. So a lot of my intraday plays show up, but it's not until the following day where we can actually take advantage of it, especially for swing trades, right? So let's say that a stock is running up. The relative strength index doesn't officially close until the closing bell. And so that is what gives us an opportunity to take advantage of that the following morning. Okay, so that's what I'm going to do today. I'm going to go over a couple different stocks, some of them that were moving quite a bit higher, but most of them that I'm going to go over today were moving quite a bit lower yesterday. And I have a couple good setups for you guys going into this morning's session. I had WDC on the radar. So this is what happened on on Monday. So you had this relative strength index that continued higher, but price action continued to creep higher and higher as well. No real pullbacks in the relative strength index, and there was no real sell-offs in the price action either in WDC. So I gave you an upside target right here at basically a pierce of $415. The price action indicated that it should continue to move up a little bit more. You have this huge upsloping trend line, the relative strength index on the daily time frame. Like all these different factors were indicating that there should be a pullback. However, the intraday on Monday said that we should get a pop first and then a pullback. And so it got up to 400 or 100 and basically $114. So it missed our entry price by just a fraction, just about $1 on a $114 stock. So that's just under 1.5%. Unfortunately, we didn't get filled. I still like this. WDC at a pierce of $115 still looks like a great opportunity for a swing short, even a day trade. And so this is a stock that I would have to dollar cost average into. So if you guys aren't interested in dollar cost averaging, if WDC heads up to $115 and pierces that $115 level and it closes above that level on a 15-minute closing basis, consider stopping out. Or if you want a dollar cost average, every dollar higher is what I would look to do. On a swing trade basis, I would go about a 2 to 3% of my portfolio, knowing how overextended the relative strength index. My robot is one that has been beaten up. I've got this beautiful chart pattern on the relative strength index. The RSI stayed really low on IRBT. So that indicated that there was there was a lot of selling pressure. IRBT was down almost 10% yesterday. Keep in mind, this is a speculative play. The market cap is $102 million. So it's a micro cap. However, it's got a great sell-off. So for me, this indicates that there should be additional selling pressure today. But if you go to the daily time frame, you've got this beautiful wedge pattern that IRBT is kind of setting up. And so what I'm looking at is this pierce of where basically $3.40 for me would be a great entry. Not only do you have this gap fill, but you've also got this upsloping trend line that's kind of coinciding with that that gap fill. So for me, on a long play, IRBT, and then what you would be looking for is a move above this downsloping trend line where price action, if it can get above that and confirm, then you're likely to head back up to $5.51. So overall, the chart of IRBT looks great. I wouldn't necessarily start a swing trade long now unless you're looking for like a long-term horizon on IRBT. Then, if you want a dollar cost average, maybe start with a 1 or 2% of your portfolio and then add on the way down. AFRM had gotten beaten up yesterday. So look at the intraday price action. So we did get a little bit of a pop after an initial sell-off. However, the price action continued a little bit lower on the chart of AFRM. And then the relative strength index never really confirmed above the 70. What I look for is what the price action is doing in correlation with the relative strength index. If we can get a pierce of the 70 and then it starts breaking some pivot highs, then the momentum had shifted in that particular stock. But unfortunately in AFRM, that didn't happen. And so I do anticipate a little bit more of a sell-off today. And so what I'm going to do is take a look at the daily time frame. Similar price action with IRBT, whereas you've got this upswing trend line. So for me, this upswing trend line would be a great support. And so for a long trade, I would be looking for right around $77 for an entry for a long. Now, on this wouldn't be necessarily a long-term play. This, I would be looking for about a 10% move on a swing trade basis. The nice thing about an upsloping trend line is any close below on a daily closing basis, you can just stop out of that trade to avoid any more potential downside. Because if an upsloping trend line breaks, there is potential for a continued fall, and then you could even come back down all the way to 62. The RSI trade of the day is MCK. So McKesson Corporation. The relative strength index on the daily time frame is about to hit the 70. I do anticipate a move higher on MCK, not only on the daily time frame, but if you look at the intraday time frame, the relative strength index got up to the 70, never got below the 30, put in a nice bullish consolidation, pretty much from 1040 all the way till the closing bell. So for me, this indicates that the price action, or there should be continued buying pressure. So for me, the relative strength index trade of the day, if it gets up there to $290, $790, this would be a pretty substantial move on MCK. But based on the fact that it's taken out this high pivot, consolidated below it, taken it out, it still has potential to run. So again, $790 is my RSI trade of the day. I do anticipate it getting up to that level, if not today, probably by Friday, and I would still like that as an RSI trade of the day. The last one I wanted to kind of show you guys for another swing trade, now that the RSI trade of the day is over, is KDP. If you guys don't know about KDP, it is paying a dividend. It's a dividend paying stock. Keurig Dr. Pepper, look at the relative strength index. You have this price action that continues to head lower, and basically a neutral relative strength index on the RSI. 21.72. That's pretty low on the relative strength index. As price continues lower, relative strength index isn't heading lower with it. For me, this is a great swing trade opportunity with potential upside to head up to this gap fill right here, about $35. So if you were to get in right now, you could look for about a 32% move to the upside. So KDP looks like a great swing trade opportunity for me.